What is the most dangerous lie in the world? It doesn't come from a stranger or a sworn enemy. The most devastating lie is the one told by a family member who looks you in the eye, maybe even sheds a tear, while methodically picking your pocket. It's a lie wrapped in years of shared memories and trust, which makes it the perfect crime. I want you to place yourself in this situation. You get a call. The business you poured $50,000 of your inheritance into, the dream you built with your own cousin, is dead. He summons you and the handful of loyal employees to the workshop. With a performance worthy of an award, he announces that the money is gone. The business is bankrupt. He claims he's the biggest victim, that he's lost everything. All the while, the sun is glinting off the paint of a brand new $80,000 luxury SUV parked in his driveway at home. This exact scenario happened, and while the employees stood there in stunned silence, their lives crumbling, one question began to burn through their shock. How? How does a successful company with a backlog of high-paying clients suddenly go broke? The math didn't add up. His story didn't add up. And his new lavish lifestyle was a direct contradiction to the poverty he was performing. This is where the real investigation begins. That gut feeling of injustice is the starting point for uncovering the truth in family financial crime. I am the family wealth detective. My mission is to dissect these betrayals, not for entertainment, but for your education and protection. Today, we will first walk through the entire story of the Artisan Woodworks case, a calculated $85,000 fraud hidden behind a veil of crocodile tears. After you have all the facts, we will conduct a full forensic analysis. In that analysis, I will show you the exact three-step process these employees, carpenters and bookkeepers with zero legal experience, used to follow the money and build an iron-clad case. I will break down the crisis narrative, a powerful psychological manipulation tactic that financial predators use to disarm their victims. Most importantly, we will analyze the shocking, high-risk confrontation they initiated when they uncovered the truth. A response that did not involve law enforcement, but was terrifyingly effective. This channel is a training ground for financial guardians. We are learning from the wreckage of other people's lives to ensure your family's legacy is secure. If you are committed to protecting your wealth and your loved ones, hit that subscribe button and answer this question in the comments. Have you ever suspected a family member was not being honest about money? The partnership that created Artisan Woodworks was solidified over a Sunday dinner, surrounded by the comfortable noise of family. Leo, having recently come into an inheritance, listened intently as his cousin Adrian laid out his vision. Adrian wasn't just a woodworker, he was a true evangelist for his craft. He spoke of bringing old-world quality to modern homes, of building a reputation for excellence that would be second to none. He was charismatic, persuasive, and brimming with a confidence that seemed unshakable. Leo, with your capital and my expertise, we can't lose, Adrian promised, leaning across the table. You won't have to lift a finger. Just provide the seed money, be my silent partner, and I'll build us an empire. It was an act of profound faith when Leo agreed, transferring $50,000 to his cousin based on that promise. It was a handshake deal, a bond of blood over a contract of ink. Leo wasn't just investing in a business, he was investing in Adrian. For 7 years, that faith appeared to be a brilliant success. Artisan Woodworks became a name synonymous with quality. Adrian was a master at winning contracts and managing clients, while the workshop floor was commanded by a team that saw their work as a vocation. The soul of the operation was Matteo, the lead carpenter. He was a quiet, formidable man who could tell the quality of lumber by its scent alone. He once spent a week perfecting the intricate joinery on a library for a wealthy client, a detail so fine the client himself might never notice. But Matteo knew. It was this commitment that earned them their reputation. Working alongside him was Isabella, a finisher who treated her stains and varnishes like a painter's palette. She could match any wood tone and create finishes that were both beautiful and durable. And then there was Fatima, the twice-a-week bookkeeper, whose meticulous nature ensured that payroll was always correct and expenses were neatly logged in her limited access software. Adrian cultivated a powerful work-family culture. When David, one of the younger craftsmen, had his car break down, Adrian gave him a cash advance for the repairs, no questions asked. They held summer barbecues where Adrian himself was at the grill, making everyone feel valued and part of something special. This wasn't just a job for them. It was a source of pride and stability. They trusted Adrian completely. He was their leader, their provider, and their friend. This deep personal loyalty was the foundation of the company's success, and it would later become the primary camouflage for Adrian's betrayal. The integrity of that foundation was first tested not by a dramatic event, but by a simple phone call. A supplier, whose relationship with the workshop was nearly as old as the business itself, called Leo directly. Their account was 90 days past due. It was a significant sum, and the supplier was concerned. When Leo approached him, Adrian put on a masterful performance of unbothered confidence. Leo, you have to stop worrying," he said, laughing it off. "This is just how business works. We're waiting on a massive check from the Miller project. It's a 6-figure job. The client is a bit slow, that's all. The money will be here next week, and this little hiccup will be a memory. Trust me." Leo, wanting to believe his cousin, let it go. But soon the signs of hiccups became a persistent condition. The workshop, once Adrian's pride and joy, began to show neglect. Matteo's requests for a new, safer table saw were met with endless delays. "The budget is just too tight right now, Matty," Adrian would say with a sigh. "We have to make do for another quarter." Isabella found her requisitions for premium German stains being denied, replaced with cheaper, inferior products. "It's a temporary cost-saving measure," Adrian assured her. "Clients won't notice the difference." But she knew they would. While the workshop was being starved of resources, Adrian's personal life was flourishing. His reliable work truck was replaced by a gleaming, new $80,000 luxury SUV. A few months later, his social media was filled with images from a 2-week Italian vacation. There were photos of him and his wife clinking champagne glasses on a balcony overlooking the Grand Canal in Venice, a video of them sampling wine at a Tuscan vineyard, and a final shot of them smiling in front of the Colosseum in Rome. The disparity was impossible to ignore. A business supposedly struggling to afford basic supplies had a CEO living a life of extravagant leisure. Leo, his anxiety growing, finally confronted Adrian again, trying to be diplomatic. "Adrian, the trip looked amazing, but some of the team are worried. They see the new car and the vacation, and then they're told we can't afford new equipment. It's sending a mixed message." Adrian's friendly demeanor evaporated. "A mixed message?" He shot back, his voice rising. "I haven't taken a real vacation in 3 years. That trip was paid for with a bonus I earned from the Lexington project 2 years ago. It has nothing to do with today's cash flow. I am pouring my life into keeping this business afloat, and I'm getting grilled for taking a vacation? This is unbelievable." He stormed off, leaving Leo feeling guilty and ashamed, as if he had crossed a line. It was a masterful deflection, a textbook maneuver to make the person asking a valid question feel like the one in the wrong. The cracks were no longer just visible, they were deepening, and the entire foundation of trust was beginning to groan under the strain. The end came on a Tuesday. Adrian called a mandatory meeting in the center of the workshop. The air was thick with a nervous energy. As the team gathered, they saw a man they barely recognized. His face was a carefully constructed mask of sorrow and defeat. "Please, everyone," he started, his voice heavy. "This is the hardest thing I've ever had to do." He paused, taking a shaky breath. "As you know, we've been facing some serious financial headwinds. I've done everything humanly possible to keep us afloat. I've put my own savings in. I've remortgaged my house. I haven't slept in weeks trying to find a way out." He looked around the room, letting his words hang in the air. "But the debt is too much. A major client went bankrupt and won't be paying us. Material costs have tripled. There's nothing left. The numbers don't work." He finally looked at Leo. "I'm so sorry, but Artisan Woodworks is closing, effective today." The silence that followed was profound, a vacuum created by shattered hopes. Isabella covered her mouth, her eyes welling with tears. Matteo stood motionless, his face grim, his jaw set like concrete. These were not just jobs, they were careers, livelihoods that supported families. Adrian had just extinguished them with a speech. He wasn't finished. "To make matters worse," he continued, his voice dropping to a near whisper. "The bank has frozen our accounts. There's no money for severance. I can't even guarantee your last paychecks will clear." This final detail was a kick to the gut. It was a complete and total wipeout. Then Adrian delivered his final, self-serving line, a masterpiece of manipulation. "I know this is hard for you," he said, his eyes glistening. "But believe me, I'm the one who has lost the most. I've lost everything." He didn't wait for questions. He simply turned and walked out, abandoning them in the silent workshop that was now a crime scene. In the immediate aftermath, a wave of despair washed over the group. David, the youngest craftsman, sat down on a stack of lumber and put his head in his hands. Isabella was openly crying. Leo felt a cold hollowness in his stomach, the dual loss of his inheritance and his family bond. But as the initial shock subsided, it was replaced by a cold, hard anger. Matteo was the first to voice it. "No," he said, his voice low and dangerous. "I don't believe it. I don't believe one word of it." That single spark of defiance was all it took. The victims were about to start fighting back. The seeds of the investigation were sown that same evening. Fatima, the bookkeeper, couldn't shake the feeling that she had been a pawn in a game she didn't understand. She called Matteo. "He kept me away from the main accounts for a reason," she stated, not as a question, but as a fact. "The revenue was there, Matteo. I saw the project totals. Even with high costs, there should be hundreds of thousands of dollars in reserve. Where did it go? That's what we're going to find out," Matteo replied, his voice resolute. The next morning, the fired employees convened at a small coffee shop. It was a grim, determined gathering. They weren't there to mourn. They were there to hunt. Fatima laid out her one lead, the mysterious, Pinnacle Strategic Consulting. David immediately opened his laptop. The search for the company's registration took less than a minute. When he turned the screen around, the table fell silent. The owner was listed as Adrian's wife. The reaction was not a gasp of shock, but a collective, grim nod. It was a moment of sickening clarity. This wasn't a business failure. It was a conspiracy. With this crucial piece of information, they formulated a plan. They divided their tasks with the efficiency of a seasoned investigative unit. Matteo took on the suppliers. He called his old contacts, men he had known for years. "John," he'd say, "it's Matteo. We've been shut down. Adrian is claiming bankruptcy. To protect myself, could you send me a record of all our invoices for the past 2 years? I need to see what he was spending." His reputation was so solid that every single supplier complied immediately. Isabella handled the clients. She called the project managers she had worked with, her friendly tone masking her true purpose. "Hi, Susan. It's Isabella from Artisan Woodworks. I'm so sorry to tell you we've closed down. I'm putting my portfolio together, and I was wondering if you could just confirm the final budget you all paid for the Lexington project. It would really help me." Like Matteo, she got the information she needed. For 2 days, they worked relentlessly. They gathered in the coffee shop, which had become their headquarters, and assembled the evidence. They compared the real supplier invoices to the inflated budgets Isabella had confirmed from the clients. The difference was staggering. Then, Fatima, using her old login, was able to access past bank statements, and they traced the outgoing transfers. They matched, nearly to the dollar, the creamed profits with the payments made to Pinnacle Strategic Consulting. They uncovered a clear pattern of fraud, totaling just over $85,000. They printed every document, every email, every invoice, every bank statement, every corporate filing. They organized it all into a massive 3-inch binder, complete with tabs and a table of contents. It was an iron-clad, self-contained case file of Adrian's crimes. This binder was not just a collection of papers, it was their weapon. The final meeting was set. They called Adrian and asked him to meet them at the workshop, telling him they needed to arrange a time to pick up their personal toolboxes. When Adrian arrived, he walked in with an air of weary authority, expecting to manage one last, sad administrative task. Instead, he found the 5 employees seated at a large workbench, a silent jury. Leo stood apart, a witness to the proceedings. "What's all this?" Adrian asked, his forced smile faltering. Matteo gestured to the empty chair opposite him. "Sit down, Adrian. We're not here for our tools. We're here to talk about the $85,000 you stole." The color drained from Adrian's face. "Stole? That's a disgusting accusation. I told you, the business failed, he retorted, his voice a mix of indignation and rising panic. Then you should have no problem explaining this, Fatima said calmly. She stood and opened the binder. She didn't turn it around. She walked it over and placed it directly in front of him, open to the first page, the registration of his wife's shell company. Adrian stared at it, speechless. Fatima began to turn the pages. Here is the real invoice from the lumber supplier for the Miller job. $18,000, she said, her finger tracing the line item. And here is the budget you submitted to the client, billing them $25,000 for the same lumber. The $7,000 difference was transferred to this account. She flipped to a bank statement 2 days after the client paid. She continued this process, page after page, a calm, methodical destruction of his lies. With each turn of a page, Adrian seemed to shrink. His attempts to protest died in his throat. The evidence was absolute, undeniable. Finally, after the last piece of evidence was presented, Isabella slid a single sheet of paper across the table. This is what you owe us, she stated. Final pay, vacation time and severance, $45,000. Adrian looked at it, then back at them, a desperate, cornered look in his eyes. I don't have it, he whispered. It's gone. That sounds like a personal problem, Omar said, speaking for the first time. Sell your new car. Matteo leaned forward to deliver the terms. You have 24 hours to put that money in our account. If you do, we all walk away. No police, no press. We disappear. He held Adrian's gaze. But if that deadline passes, this binder gets copied. A copy goes to the district attorney for felony embezzlement. A copy goes to the IRS for tax fraud. And a copy goes to the media with a full press release detailing how you and your wife stole from your family and your employees. Your life in this town will be over. You have one choice. Adrian was broken. He tried to appeal to Leo, who simply shook his head, a look of profound disappointment on his face. The 24-hour deadline passed in silence. The employees waited, a knot of anxiety in their stomachs. Had he called their bluff? Then, 36 hours after the meeting, a message lit up Matteo's phone. It was a confirmation of a wire transfer. The full amount was in their account. A wave of relief, of grim victory, washed over them. They had faced the man who had wronged them, and had, against all odds, clawed back a measure of justice. The story of what happened at Artisan Woodworks is now complete. A group of ordinary people, when faced with an extraordinary betrayal, chose to fight back with the one weapon their boss never expected them to have: the truth. If you find their methodical pursuit of justice compelling, hit that like button. It tells the platform that this kind of critical education is valuable. Now, our analysis begins. Now that you have the full story of what happened at Artisan Woodworks, we will conduct a complete forensic analysis. This is the most critical part of our work. We will move beyond the narrative and dissect the psychological drivers, the financial mechanics, and the hidden vulnerabilities that allowed this crime to occur. This is where we uncover the universal patterns and extract the vital lessons that can serve as a shield for you and your family. To truly understand and defend against a financial predator like Adrian, we must look past the actions and analyze the mindset. Adrian's behavior is a clinical illustration of charismatic narcissism, a personality profile that is exceptionally dangerous in a family business context. Let's break this term down into its two components. First is the charisma. This is the social mask, the weapon of impression management. Adrian's charm was not just a personality trait, it was a strategic tool. Think back to how he convinced Leo to part with $50,000 based on a handshake. He didn't present a detailed business plan, he sold a dream. He used what we can describe as a form of business love bombing. He made his partner and his employees feel special, valued, and part of an exclusive, successful family. The barbecues, the praise, the cultivated work family atmosphere, all of this generated what is known as narcissistic supply. This is the admiration and loyalty from others that a narcissist requires to feel important and validated. But for the victims, this charisma creates a powerful bond, making suspicion feel like a betrayal in itself. The second component is the narcissism. This is the engine of the crime. It is characterized by a profound lack of empathy, an unshakable sense of entitlement. and a view of other people as objects to be used for personal gain. Because of a psychological trait known as lack of object constancy, a narcissist like Adrian can see people as valuable extensions of himself one moment, when they are providing him with supply, and as worthless obstacles the next, when they question him or have needs of their own. This is why he could praise his employees one day and leave them financially destitute the next, without feeling genuine remorse. In his mind, his needs are paramount. He truly believed he was the sole reason for the company's success. Therefore, the money the company generated was not the company's asset, it was his reward. This cognitive distortion is critical to understand. He wasn't just breaking the rules, he believed the rules did not apply to him. This psychological profile armed him with his primary tactic, financial gaslighting. This is a deliberate strategy of psychological abuse designed to make you question your own financial reality. Adrian's use of this tactic followed a clear three-stage pattern. Stage 1. Dismissal. This is the initial deflection. When Leo first brought up the late payment, Adrian's response, "Leo, you worry too much," was a classic dismissal. The goal is to invalidate the concern immediately by reframing it as a character flaw in the victim. The message is, the problem isn't the finances, the problem is your anxiety. Stage 2. Disorientation. When questions persist, the gaslighter creates a fog of complex, confusing, and often contradictory excuses. Adrian invoked supply chain issues, rising material costs, and slow-paying clients. The sheer volume and variety of these excuses make it difficult for the victim to track any single issue. This creates a sense of disorientation, making the victim feel that the finances are simply too complicated for them to understand, leading them to defer to the expert control of the gaslighter. Stage 3. Attack. If the victim pushes through the fog and gets too close to the truth, the gaslighter switches to open hostility. Adrian's furious reaction to being questioned about the SUV, "Am I not allowed to enjoy my life?" is a Stage 3 attack. He reframes a legitimate business question as a personal, unfair assault on his character. This not only shuts down the immediate conversation, but also punishes the victim for asking, making them far less likely to ask questions in the future. Now let's move from the why to the how. Adrian's fraud was elegant in its simplicity, utilizing two common methods in perfect concert. The first method was invoice inflation. This is a preferred technique in businesses that deal with a high volume of physical goods or raw materials, as the fraud can be easily hidden within the cost of goods sold line item on a financial statement. The process is a systematic deception. We saw it clearly in the story with the Miller job. 1. The real cost. Artisan Woodworks receives a legitimate invoice from their lumber supplier for $18,000. This is the true cost. 2. The falsified invoice. Using simple accounting software, Adrian creates a new, client-facing invoice that looks official but lists the cost for the same lumber at $25,000. He has fraudulently created $7,000 of phantom cost. 3. The overpayment. The client, trusting Artisan Woodworks, pays the inflated $25,000 invoice. 4. The skim. Adrian uses the client's payment to settle the real $18,000 bill. The remaining $7,000 now sits in the company bank account as what appears to be legitimate profit. This is the money he intends to steal. This brings us to the second critical component, the shell company. A shell company is a legal entity, often an LLC or sole proprietorship, that exists only on paper. It has no office, no employees, and no real business operations. Its purpose is to obscure financial transactions and create a veneer of legitimacy for illicit payments. Adrian's Pinnacle Strategic Consulting was a masterstroke of deceptive branding. The name is deliberately bland, corporate, and forgettable. It sounds like a real B2B service provider. By having his wife register as the sole proprietor, he attempted to create a layer of separation, however thin. He then used this shell to extract the skimmed funds by paying fake invoices for project management fees. Legally, these actions constitute a host of serious crimes. The primary offense is embezzlement, which is fundamentally a crime of trust. A simple analogy is this: if someone picks your pocket, it's theft. But if you hand your wallet to a friend to hold, and they take the money, that is embezzlement. Adrian was entrusted with the company's finances. He didn't have to force his way in, he was given the keys. his actions were also a profound breach of his fiduciary duty. This is the highest standard of care recognized by law. As a managing partner, Adrian had a legal and ethical duty to act solely in the best interests of Artisan Woodworks and his partner Leo. Every dollar he diverted to himself was a separate violation of this sacred duty. Finally, because he used electronic bank transfers to move the money from the business account to his shell company, his actions fall under the federal definition of wire fraud, a crime investigated by the FBI with severe penalties. A predator can only hunt where the environment allows. The Artisan Woodworks business was structured in a way that made it a perfect hunting ground. Two systemic vulnerabilities made this crime not just possible, but inevitable. The first and most significant was the trust blind spot. This is a powerful cognitive bias, where the emotional connection to a family member overrides rational business judgment. Leo's relationship with Adrian was the company's single greatest point of failure. He operated on the assumption of goodwill, a common and dangerous mistake in family enterprises. This blind spot is reinforced by another psychological principle: confirmation bias. Leo wanted to believe his cousin was an honest, successful businessman. Therefore, he unconsciously favored information that confirmed this belief, the company's good reputation, and dismissed information that contradicted it, the late payments, the excessive spending. Furthermore, we must acknowledge the pain of suspicion. It is emotionally taxing to suspect a loved one of betrayal. The internal conflict it creates is so uncomfortable that many people, like Leo, will subconsciously choose to ignore red flags rather than confront the painful possibility that someone they trust is deceiving them. This creates a state of willful ignorance that financial predators rely on. The second vulnerability was the absence of formal controls, a condition I call the handshake protocol fallacy. The business was founded on a handshake and continued to operate with that same level of informality. This is not a sign of a healthy, trusting relationship. It is a sign of a dangerously unprotected business. Specifically, Artisan Woodworks was missing the most basic financial guardrails. 1. No dual signature requirement. Adrian had sole authority over the bank accounts. This unilateral control is the gateway to almost all forms of embezzlement. 2. No transparent financial reporting. Leo was a silent partner, but he was also a 50% owner. He should have had, at minimum, read-only access to the primary bank accounts and received mandatory monthly financial statements to review. 3. No independent verification. The lack of a policy for an annual review by a third-party accountant meant that Adrian's books were never subjected to an unbiased set of eyes. 4. No formal partnership agreement. A handshake is not a business plan. A proper legal agreement would have explicitly defined Adrian's financial authority, Leo's oversight rights, and the protocols for financial transparency. These controls are not bureaucratic red tape. They are the essential safety systems that protect a business and its partners from human weakness, error, and outright criminal intent. The conclusion of this case is one of the most fascinating and instructive aspects. The employees chose to pursue a form of extrajudicial justice, sidestepping the legal system entirely. This path has clear, pragmatic benefits. By confronting Adrian directly, they achieved speed and certainty. The traditional court system is slow, expensive, and the outcome is never guaranteed. Adrian could have declared bankruptcy, tying up the case for years and potentially leaving the employees with nothing. Their direct action resulted in a $40,000 payment in 36 hours. For people who needed to pay their rent and feed their families, this was a logical and effective solution. However, this approach is fraught with peril and moral complexity. The employee's ultimatum, "Pay us, or we go to the authorities," walks a razor-thin line next to the legal definition of extortion. Extortion is the act of obtaining money or property through threats. While their cause was just, had Adrian decided to call a lawyer instead of capitulating, the employees could have found themselves in serious legal jeopardy. Furthermore, this resolution represents an incomplete justice. Their focus was solely on their own recovery. Leo, the partner who lost his $50,000 initial investment, was not made whole. The suppliers who may have been left with unpaid bills were ignored. And the state, which was defrauded of tax revenue by the undeclared income from the shell company, was never notified. Adrian, while financially impacted, was allowed to escape without a criminal record, leaving him free to potentially repeat his crimes in a new community. Let's contrast this with a formal criminal prosecution. Had the employees taken their meticulously prepared binder to the District Attorney's Economic Crimes Unit, a formal investigation would have commenced. A state-employed forensic accountant would have subpoenaed all of Adrian's financial records, likely uncovering even more fraud. The state would have then filed multiple felony charges, likely including grand larceny, forgery, and state tax evasion. Given the overwhelming evidence, Adrian would almost certainly have been convicted, either through a guilty plea or a trial. A judge, during sentencing, would consider his lack of a prior record, but also the significant breach of trust. The sentence would have likely included a lengthy period of probation and, most importantly, a court-ordered restitution plan. This plan would have legally obligated Adrian, potentially for years or even decades through wage garnishment, to repay all of his victims, the employees, his cousin Leo, and the state tax board. While the legal system is imperfect and slow, it is designed to provide a more comprehensive and public justice than any private confrontation ever can. The path to justice is complex. Understanding your options, both formal and informal, is a critical part of wealth protection. If this detailed breakdown has helped you understand the anatomy of financial crime, please share this video. Your share could be the warning that saves another family from this kind of betrayal. Understood. We will now complete the script with the final two sections, the actionable playbook and the conclusion. This is where we transition from analysis to empowerment, providing the viewer with the tools and mindset necessary to protect themselves. We have analyzed the crime. Now, we will build your defense. A forensic debriefing is useless if it does not lead to effective prevention. The following three strategies are not abstract theories. They are concrete, practical safeguards that would have made the Artisan Woodworks fraud impossible. These actionable strategies and the critical warning signs from this case will form your protection playbook. The single most effective defense against internal embezzlement is the removal of unilateral financial control. One person, no matter how trusted, should never be the sole gatekeeper of the company's treasury. The solution is to implement a two-key system, a modern term for dual authorization. This principle is simple. For any expenditure over a predetermined threshold, let's say $1,000, the transaction requires approval from two separate partners to be processed. This applies not just to writing checks, but to every form of payment, wire transfers, ACH payments, and even charges on a company credit card. Nearly all modern business banking platforms offer this functionality, and it can typically be set up in a single phone call or online session with your business banker. Let's apply this directly to the Artisan Woodworks case. Had this system been in place, the very first time Adrian attempted to pay a fraudulent invoice to his shell company, Pinnacle Strategic Consulting, the transfer would have been frozen pending a second approval. Leo would have received an automated text or email alert on his phone asking him to authorize a payment of several $1,000s to an unknown vendor. He would have immediately called Adrian and asked, "Who is this consulting company and what is this payment for?" At that moment, the crime would have stopped before it even began. The entire $85,000 fraud, the destruction of the business, and the betrayal of the employees would have been prevented by a simple banking rule. This isn't about suspicion, it's about systems. A system of dual authorization protects the business from theft, and it also protects the honest partner from false accusations. It is an essential, non-negotiable protocol. While the two-key system prevents unauthorized transactions, the right of audit clause prevents the manipulation of the books themselves. This clause is the ultimate deterrent. A financial predator thrives in secrecy. This clause is a permanent spotlight that they know can be turned on at any moment. For any silent partner, investor, or co-owner, this should be a non-negotiable component of your formal partnership or operating agreement. It is a legally binding clause that gives you the right to hire an independent, third-party forensic accountant to conduct a full audit of the company's books. The mere existence of this clause changes the risk calculation for a potential perpetrator. They are far less likely to attempt a fraud if they know that at any time, a professional will be brought in to examine every transaction, every invoice, and every receipt. It neutralizes the "I'll never get caught" mindset. Here is an example of what that language can look like. Please note, this is for educational purposes. Always consult with a qualified attorney to draft a clause that is legally binding in your jurisdiction. The investing partner, or any partner holding X% equity or more, reserves the right, at their own expense, to commission a full and independent forensic audit of all company financial records, books, and statements. Such an audit is to be performed by a licensed certified public accountant of their choosing, once per fiscal year, upon providing 30 days written notice to the managing partner. If this simple paragraph had been part of Leo's initial agreement, instead of a mere handshake, the entire dynamic would have been different. Adrian would have operated with the constant knowledge that his cousin had the legal power to verify everything. This final strategy is about changing your personal mindset from that of a passive investor to an engaged owner. You can and should trust your family members, but you must independently verify the health and operations of the business you own together. Responsible stewardship is not a sign of suspicion, it is a requirement of ownership. Putting this mandate into practice involves 3 key actions. 1. Schedule formal reviews. Do not rely on casual family dinner conversations. Institute mandatory quarterly financial review meetings. Put them on the calendar. In these meetings, you review the profit and loss statements, balance sheets, and cash flow statements together. 2. Gain transparent access. As an owner, you have a right to information. Request read-only access to the primary business bank and credit card accounts. This allows you to log in and see all transactions for yourself. It gives you the power to spot irregularities, like a payment to a strange consulting firm, without interfering in the day-to-day operations. 3. Ask professional questions. Learn to ask clarifying questions in a non-accusatory manner. An honest partner will have no trouble explaining the business. Instead of saying, "Why did you spend so much on materials?" try saying, "I see our materials cost as a percentage of revenue has increased. Can you help me understand what's driving that?" An honest partner will provide a business reason. A dishonest partner, like Adrian, will likely become defensive, giving you a clear warning sign that something is wrong. To summarize, here are the 4 critical warning signs from the Artisan Woodworks case. If you see these in your own family business, it is time to start asking questions. 1. Inconsistent lifestyle inflation. A partner's personal spending habits and asset purchases are dramatically out of sync with the stated financial health of the business. 2. Defensive financial dialogue. Legitimate, calm questions about money are consistently met with anger, deflection, guilt-tripping, or accusations. 3. Degradation of business assets. The business itself is being starved of necessary funds for equipment, maintenance, or quality materials, while revenue is supposedly stable or growing. 4. Creation of information silos. One partner insists on maintaining sole control over financial information, preventing bookkeepers, accountants, or other partners from having a complete and transparent view. The collapse of Artisan Woodworks was not a business failure. It was a homicide. The company was deliberately and methodically drained of its lifeblood by the very person who had pledged to protect it. The story of Adrian, Leo, and their loyal employees is a harsh but vital lesson that in any family enterprise, a foundation of trust without a framework of verification is a foundation built on sand. The love, history, and affection you share with a family member can make it feel awkward or even insulting to ask for oversight. This case proves that oversight is not an insult. It is the highest form of respect. It is an essential protection for the business, for your investment, and for the family relationship itself. The role of a family wealth detective is not to create suspicion where none exists. It is to replace vague anxiety with concrete certainty. You achieve that certainty through systems, through oversight, and through the courage to participate actively in your own financial life. Do not abdicate your responsibility as a guardian of your family's wealth. Be present, be engaged, and be protected. Subscribe and ring the bell for more family wealth protection cases. Now tell me in the comments, based on this case, what is the first family financial protection strategy you will implement in your own life? Stay vigilant.